HMRC is committed to cracking down on crypto investors and is now issuing letters to people it thinks are not paying the correct amount of tax. If you're new here, I'm a qualified accountant and experienced tax advisor, and in this video, I'll explain how HMRC can track crypto investors, how they get your information, and what you should be doing. So HMRC have been busy sending out letters to people it knows have disposed of cryptocurrency or other crypto assets but have not disclosed it on their tax returns. This is an example of what the letter looks like, and at the top of the letter it says that HMRC's records show you had disposed of crypto assets but haven't declared everything correctly. The letter goes on to say that as well as paying the tax, you may also need to pay penalties and interest on any late paid tax. But who is receiving these letters, and more importantly, how are HMRC tracking you? According to law firm Mercer and Hole, for the last couple of years, HMRC have been able to obtain information from the major crypto exchanges like Coinbase, Kraken, and Binance. And they have the ability to pull information from different sources. Coinly confirm this and say that HMRC have a data sharing program with all of the UK exchanges and can access the Know Your Client information that you use when you sign up with the exchange. That means that HMRC has the ability to compare what the exchange is telling them you've done with what you have reported or not reported on your tax return. And that's how they can track what you're doing and figure out whether or not you're paying the right amount of tax. The UK government has also joined the Crypto Asset Reporting Framework, also known as the CARF. The CARF is the OECD's latest tax transparency standard. It means that all crypto platforms will need to start automatically sharing taxpayer information with local tax authorities, which at the moment they don't need to do. In the UK budget, the government confirmed that the CARF will extend to UK users, ensuring that transactions involving digital currencies are transparent and properly reported. The first reporting under the CARF will be in May 2027 for the 2026 calendar year. All of this means that the entire reporting process will become automated and standardized, which currently it isn't. So that will just make it much easier for HMRC to obtain information on anybody who is buying and selling crypto. So how do you know if you're on HMRC's radar? If you're using one of the main crypto exchanges and you've made a large transaction or a disposal, then it's likely that HMRC will know about the disposal, because that's exactly the type of information that they will be asking the exchange for. And where it suspects that there is an anomaly and that you've done something and you haven't told them about it, you will receive what's called a nudge letter. A nudge letter is basically a standardized letter that HMRC will issue to encourage you to have a look at your tax affairs. And it's a really quick and easy way that HMRC will send a standardized letter to a large group of people where it knows in this case that those people have made a disposal and not declared it on their tax return, because it literally says that at the top of the letter. I'll put the letter on the screen again now, but you can literally see that HMRC give you examples of what they would consider to be a disposal that you need to tell them about. So it does include where you've used crypto to pay for goods and services, and it also includes where you've swapped one cryptocurrency for another cryptocurrency. I've made an entire video on how crypto is taxed and about these different disposal events, because I know that it's not necessarily intuitive to think that paying for goods or services in crypto would actually amount to a disposal. So I'll leave that video linked at the end of this video if you need more clarification. Now let's talk about what you should be doing if you are a crypto investor, regardless of whether or not you've received a nudge letter. If you've received a nudge letter, it's really important that you do not ignore that nudge letter, because HMRC could start to charge you interest and tax geared penalties on the late paid tax. And that could mean that you could end up paying double the amount of tax that you will eventually have to pay to HMRC. So the best thing to do would be to consult a tax advisor to work out how to respond and to work out how much tax you owe to HMRC. If you haven't received a nudge letter, but you do invest in crypto, then it's a really good idea to make sure that you're keeping your own records of your crypto transactions by obtaining records from the exchange and then maintaining them yourself. The onus is on the investor to make sure that they're maintaining the right records and reporting the correct gains and income on their tax returns. And if for some reason you think you've made an income or a gain and you haven't received a nudge letter, remember that you can make a voluntary disclosure. And whilst penalties and interest might still apply, they're usually less if you make a voluntary disclosure, because it means that you've come forward yourself and maybe you've recognized that you've been a bit careless in your record keeping or when completing your tax return. But it is advisable to ask a tax advisor before you make any disclosures so that you make sure you're doing it the right way and that you're calculating the correct amount of tax. I hope this video was useful if you have received one of these nudge letters, but also if you haven't and you are a crypto investor trying to figure out what your reporting obligations are. Don't forget to subscribe if you haven't already, because it really will help the channel to grow, and I will see you next time.